We have a incredibly tense situation, right? With tariffs now above 100% on many goods, right? So it's nothing like what we had in 2018. This is something that can lead to a total breakdown in trade in many important sectors. So very dramatic. Um, we look at all the different indicators we can get our hands on in terms of whether China is selling treasuries. I don't think we've seen any red flags in terms of any significant selling. That doesn't mean that they couldn't have sold maybe some smaller clips, maybe to send the signal that they could do more. So this is certainly something that's worth watching. And China has a card to play in this game that could be an important card if the U.S. bond market is unstable, right? And China has some control of it, could be a very important card. But I would emphasize, right, even though China is a very important holder of treasuries, if you add up all the European countries, they hold much more. So it doesn't have to be a mass exodus from European investors in order for it to be a problem. It could just be that they buy much less than they used to, right? Because the US has a deficit they need to fund. And this is the problem, right? The US is not in a strong position in terms of a funding position if we have these conflicts with all the traditional buyers of their securities. And we hosted a chief investment officer dinner in New York a couple of weeks ago where one of the chief investment officers said, like, there shouldn't be any talk about, taxing treasuries, forcing people to hold 100-year bonds, zero coupon instruments. So these ideas that are floating around, officially, maybe not yet, but semi-officially between cabinet members and advisors, is something that's making investors very uncomfortable. Is the treasury investment safe, or is it a different proposition now? And I think this is what you're seeing so clearly in the price action over the last couple of weeks here.
Yeah, 100-year bonds. What you're talking about is the whole Mar-a-Lago Accord based on Stephen Mirren's paper. I get it. So I'm glad you brought up Europe, though, Jens, because when I think back, and this is kind of a wild idea, but let's see if we can run with this, right? When I think back to the 50s and 60s, right, Europe recycled their surpluses, created the euro-dollar market based in London, made a lot of people rich there, right? There's an outside view that maybe we could see something similar happen if, and this is a big if, at some stage in the future, we've got China tying up with India, tying up with Russia, creating an Asian dollar market, which is based on the Hong Kong dollar at some stage. Does that make sense to you, or is that totally left field?
I think I've been involved professionally in the currency market, right, since 2000. So it's a few years now, right? And we've gone through these waves where we talk about is the dollar's reserve currency status in question? And it's always been a relatively simple answer, not really. But I think the question is much more relevant and correct to raise now, right? Because we have this self-inflicted uncertainty about the safety of U.S. assets, and people are going to be searching for alternatives in a much more deliberate fashion now, because the risk associated with dealing with the United States has gone up so dramatically, right? So whether that's the euro assuming a greater role, that's something Europe previously did not want. And now we start to hear voices from Europe that maybe European policymakers are actually okay with the euro assuming a greater role in the world as a reserve currency. There's also the concept of a BRICS currency construct that is very complicated given the different voices, right? But it's something that suddenly seems a more relevant idea. And then obviously there's the old reserve currency that everybody knows about and has existed for centuries, gold. And look what's going on with the price action around gold. Even with almost very little speculative involvement, you can see it in the futures market. It's not a speculative move. It's a real fundamental move, and that has to be tied to this question around the dollar's reserve currency, which it's the first time in my career where I think this question has to be taken seriously.